Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, December 16th, 2012. We'll kick it off with the S&Ps and look at some broad market action here. Basically, this week we had a movement above the 61.8 retracement from high to low. That's essentially this level right here. And that's at the 1423. Although we didn't hold it, I'm still of the opinion that once you cross it and you're able to close a daily bar above it like we did this week, that it's pretty bullish, and it tells me that there's a greater chance of the market moving up to the old highs rather than coming back down to the old lows, because the 61.8 has been taken out. Obviously the market's going to have to show and prove a little bit this week. The sort of skittishness because of the fiscal cliff news continues, and it seems like the market just wants to sell off every single time that there's negativity. So obviously we still have to continue to deal with that. But from the technical picture, I would say unless the 1400 lows are taken out, which is right in this area here, I'll just draw it horizontally like that. Unless these 1400 lows get taken out, then probably the path of least resistance, we should assume, is going to stay to the upside. So I'm going to be watching these lows closely next week, which is right here just under 1400. The Dow is in a similar situation right now, showing a lot of relative strength, actually, definitely to the NASDAQ due to the Apple weakness, which we'll get into in a second. Also crossing over the 61.8 there. On the NASDAQ composite, again, this is mostly due to the weakness in Apple. We have not been able to move above the 61.8 at all, right? You can see here that that would have put it at around 30.50, and we topped out on a double top here. But again, same thing. You have pretty strong support here to the left of us, and we're kind of right at that support. So we'll have to see how this week starts to play out. All right. All right. Taking a brief look at the market profile before we head into next week. One thing that I'm noting is that we do have a poor low on Friday. Friday was really a day of just kind of consolidation with a really choppy area in the low end of the profile. And when I say poor low, I mean this, meaning that there's no excess to it, such as here. This is like an excess low. This is more of an excess low where you have the skinny area at the bottom. Remember, these poor lows mean that the market essentially was getting itself overly short. Could be susceptible to some short covering really quick. It's like the opposite of a liquidation break. So what we may see on Monday if the futures open up flat or gap up is that any sort of buying in the early stages could be like a spike move higher, because there's a lot of short covering that needs to ensue, because what's actually happened in the market is the short-term traders have just gotten themselves overly short. You can see that here. If we go to the SPY, for instance, intraday, I'll show you on Friday. Essentially they just kept trying to press the market lower and lower, and really didn't have much to show for it. So, the inventory of the futures traders, they're much more short than long at this point, and that's why any sort of surprise to them from the upside usually can lead to a violent move early on. That's essentially just a quick short covering rally. So I'm not saying that's definitely going to happen, but that's essentially what the profile is telling us could happen. If we revisit this area early next week, this poor low obviously becomes weakened every time it tests. It does need to repair. Remember, repair of the low means that it needs to fill out the profile to make it look a lot more symmetrical than it should, meaning that it needs a tail down here, which it currently doesn't have. So repeated tests of this area would weaken it, and then the market, the profile would repair itself. If it did repair itself, obviously I would be looking for that 1398, 1400 level as a possible target, where I do think that the support in the market is pretty strong. All right, let's take a look at some charts here. Dollar index is under some serious pressure, and I wanted to alert everybody to that. Those of you that follow currencies and also commodity items, notice that there's an ascending trend line right now in the dollar, which you made a higher high here, came back down almost to test it. This is definitely a lower high, and now we're testing the trend line again. So the dollar is really kind of at a make or break situation here. Notice that Thursday's low took it actually right to the trend line, and then instead of bouncing from there and reversing course as it did before or here at the higher low, notice what price did. You had a very small doji on Thursday, And then the price action was decidedly weak on Friday and looks to me like it wants to retest that area. So the key to trading on trend lines essentially is, let's say you're going to short, you generally wait for the bounce. You either short on the bounce and then you short more as you break the trend line. And one of the keys to pulling that off is the simple fact that the weaker the bounce is, the more susceptible the stock or index, whatever it is you're watching, is to break that trend line to the downside right from there. So we shall see if that happens. If that happens, obviously it's going to have effect on commodities. It's quite interesting here that the GCs are not responding at all to the weakness in the dollar, so I do think there's probably more weakness to come for gold. I may be watching some of these ascending trend lines, and let me edit it because it's in yellow. I should put it in red for you guys so you can see it on this chart. There we go. So possible move to some of these ascending trend lines here, such as the 1640 area. I'm absolutely not interested in any trade in gold at this point. I may be interested on the trend line because it is more of a longer term support line, and gold does tend to respect those lines very well, as you can see here. So possible trade on the GCs at 1640, but absolutely nothing yet. Where I do think there is going to be a trade this week, however, in the future space would be in natural gas. There's been a pullback here after a higher high. So that is bullish. Once we had we have made a higher high, as the outlook for nat gas has been kind of bullish here. And you can see here that we're now pulling back to pretty strong trend line support right in the 315 to 325 area. So I will be interested in a bounce here for futures, probably playing it very straight with the NG contracts by themselves. And as I've discussed before in the video, I may also be interested in some UNG, but probably more for like a covered call sale on the UNG, and that's the ETF that tracks natural gas. All right, I made some comments on Tasty Trade on the ShadowTrader Uncovered show recently this week. That this week I liquidated the remaining of my mortgage REITs, those being ARR and AGNC, Alpha Romeo Romeo, or Alpha Golf November Charlie. I did that on Thursday as we moved here below the Wednesday low, and I think it was the right move. They seem to be rolling over. AGNC looks the same. In AGNC, I am foregoing the December dividend, which is going to go X date on Christmas Eve. I believe December 24th is the X date for the stock. The dividend is not payable until January. I don't care about it. I'm basically going to forego that. In ARR, I did manage to make the X date, so I will collect one last dividend in ARR. My reasons for clearing the decks here are both technical and psychological, and by that I mean simply that they definitely look like they're rolling over and there's danger of them revisiting the lows from the chart pattern, but also psychological in that I've had a pretty strong run in all of these names. I've done very well not only in dividends but also in price appreciation, so by the end of the year I just kind of wanted to clear the decks, and I'm going to be reworking a new long-term high-paying dividend stock list for 2013, which I'll definitely share with all of the ShadowTrader followers and possibly on Tasty Trade as well, so be looking for that. Probably either before the end of the year or early in the first week of the year. I'll come out with that list and we'll get it on shadowtrader.net, and that way you guys can follow along with whatever I'm doing in terms of these long-term plays. I will still be taking interest in MREITs. I'll be looking also at some oil and gas limited partnerships, some more regular brick and mortar REITs. I've been talking about OLP, which I continue to like. I still hold a small position of OLP. I am looking for a retest of the highs, and I'm not sure why my chart is, there we go, my chart was screwed up for a second. Possibly in here I would be selling out there, and that would clear the decks of all my dividend stocks, and I'll be reassessing the situation for 2013. All right, beyond that, one last note, be looking for some changes in terms of strategy for ShadowTrader Pro Swing Trader newsletter. Been tweaking that a bit, and I'm going to be coming up with something new for 2013. We tweaked the strategy a bit for 2012. Did improve the performance somewhat, but not as well as I would have liked, so we're definitely going to be tweaking that strategy, and it will have a lot to do with Fibonacci levels and some of these larger moves in the broad market that have been really just respecting technicals really well. And I think there's going to be opportunities for some bigger, more longer-term trades, at the technical level, such as the fib numbers or the trend lines, support and resistance, etc. All right. Last but not least, the big Alpha Alpha Papa Lima. This is key. I made some comments on the Tasty Trade show on Thursday that I felt that if the stock lost the ascending trend line from the November lows that you can see, and mind you, this is very, very similar to the DX trade, right? A few minutes ago, we looked at a dollar index chart that is very similar, and I was saying we could see a little bit of a free fall action in the dollar if that trend line is lost. Notice that the pattern in Apple is basically the same, and yet we lost it today on Friday. Stock was weak right off the open. Huge volume increase, had about 3.5 million shares traded in the first 5 minutes. The overall carnage was not that bad, meaning I think we could have gone down much lower. Basically, all we did was fill up the triangle, so to speak, coming to the prior low. But I do believe that this is setting us up for the move that I've been talking about, which is the move to the 460, 470 ascending trend line on the monthly. And I'm going to show it to you one last time. Here, that's it there. So this is a multi-year support here, very, very important key technical level, and we're coming from the '09 lows, basically 4 full years now of uptrend, culminating in this correction from 700, and currently the trend line is sitting right around 464. So as I've been discussing for quite a while, I will be an aggressive buyer in this area, probably deep in the money calls, far dated 2013s. I'm not sure of what the month yet. That really doesn't matter. The whole point is to get the delta as close to 1 as possible and not be paying extrinsic value for options that you're going to be holding for a long time. So I'll be looking at that. There's going to be opportunity on the weeklies as well, possibly next week if we go to that level. I've been talking about ratio spreads a lot. You can take a look at what the, say, 470 to 460 ratio spread is trading for. Remember, this will help you to capture some of the down move if you have faith that the support level at the 460 to 470 area is going to hold. Remember, you're going to be short 2 options there. What's interesting about the ratio spread here is that a lot of people sell naked puts in areas of support where they're comfortable with owning the stock anyway. Well, think about this. If you have the 475, 460 ratio spread, which currently is a 9-cent debit, if the stock moves lower, that spread is going to open up a little bit and probably trade for a credit. If you were to put that on next week for even money, remember, you will be put some Apple at 460 if it closes below 460 next week, but at the same time you'll have a $15 wide long vertical, which you will then be able to obviously sell for $15. So that's just one way to play it, possibly, meaning you'd be long the stock at 460 and you'll have this vertical spread, which will give you a discount on the stock. So just one way to play it if you have faith that the 460, 470 support level is going to hold. So I'm going to be watching that very closely in the coming weeks, see if we can get an entry going there. All right, that's all I have for this week. As always, from beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.